as I've gone through this process of raising money and hearing way more no's than I hear yeses, I have had to really remember the self-talk and the conversation about failure and like, what does failure really mean? Does a no mean failure, or does a no mean just like no, which is in the context of many years and many conversations, a totally irrelevant data point in the broader narrative.
Welcome to another round of Founder Real Talk by Wisdom Partners. I'm Josh Broward. I am your host. I'm the CEO of Wisdom Partners. And today we have a special guest, Rachel Stern. She is the founder and managing partner of GovTech VC. And so this is an interesting one because she is a founder, sort of, but also works with lots of founders. So we're going to get kind of a dual take here as we explore what it's like to start and run your own VC and what Rachel sees in the founders that she works with. So without any further ado, Rachel, so glad you're here.
Thanks for having me, Josh. Yeah, I mean, I have never felt more empathy or connection with my potential portfolio companies as I do after starting a fund, because it is a lot like building a business and building a startup, and you have to convince people to give you money, and you have to come up with a strategy, and you have to figure out and justify why you exist in a world of companies and startups and venture firms. And it has been a tremendous learning experience for me.
Wow.
Humbling learning experience.
Love it. Love it. That's what we're going to dig in on. So tell us a little bit more about what you do and why.
Yeah, so GovTech Ventures was built because I saw a real need in the early stage ecosystem for capital and expertise and go-to-market support for startups that were building solutions for state and local government, which is a very weird corner of the world. I think when a lot of folks hear the word GovTech, they think about the federal government, they think about the DoD, Department of War, and I am just weirder and nicher than that. I think that state and local government impacts our lives daily, if not hourly. I think that the systems that exist to support that infrastructure are good, not great, would maybe be a mild way of saying that. And I think we rarely leave experiences interacting with different levels of government thinking like, wow, this system works perfectly. And so when I think about investing and impact and really making a meaningful difference in the day-to-day lives of people, I think about transforming the systems that serve us. And there are some really remarkable people building solutions for things being done on paper and in person and manually, and systems not talking to each other, especially in this age of AI. It just felt like too exciting of an opportunity to pass up.
Cool. That's great. And we didn't really get into it much for your bio, but you have a background working with state and local governments. Tell us a little about that.
Yeah, I've been doing this for 15 years. So I founded a firm called In-State Partners. We were a wholly owned subsidiary of a private equity firm. And the way that the private equity firm does investing is they work directly with state governments to create pools of capital to invest in a state. And there's more complexities involved in that, involving tax credits and insurance companies. But really, it was like, how do you keep capital within a state and invest in the emerging companies there and the entrepreneurial classes and the geographies that typically don't have access to that capital? And in doing this form of investing, they'd created a network of lobbyists in almost every state capital. And I took that network and made it an asset that I sold to other companies. And it was this great moment in time because we were seeing a lot of technological transformation in all sorts of corners of the world. And what that meant is government was doing a lot of proactive regulation of those emerging technologies. So Lyft and Zoom and Square and Hims and Hers and Bird Scooters were all sort of category creators in their time, and state and local government didn't know what to do with them. And so they hired me to sort of cover the middle 30 states for them and go into state capitals and work with governor's offices and build coalitions and pass legislation for things like insurance that covered ride sharing, which had never existed before. So I learned a lot about state legislation and preemptive legislation as a means of creating market share and also navigating regulatory environments so that your business didn't go out of business. And then this really interesting thing was happening in parallel to that, where states and cities were just starting to adopt the cloud. This is sort of the 2011, 2012 era. And what had historically been super customized, multi-million dollar, multi-year projects, all of a sudden software as a service became possible, where you could plug and play into these existing systems without having to rip and replace. And so I started exchanging equity for services with some of those early cloud providers and SaaS providers. Fell in love with working with founders in the earliest days of finding product market fit and pricing and partners and how to figure out the low-hanging fruit for their markets. And as we grew our portfolio of these equity for services, I found that the best stage of company for what I was offering, which was this network of relationships and know-how, were slightly later. They were sort of seed plus to A to B because they had the internal capacity to be managing multiple markets. But I loved them early. I loved figuring out the deeply strategic, how do we build the foundation of a really long-term healthy business? And so after 12 years of that, I went in-house at a startup actually in the Sacramento area, also in GovTech as their chief strategy officer, helped them scale, learned a little bit about the operations side of things and fundraising and data and sort of later stage strategy. But finally sort of had this bug to focus on early stage founders and recognize this need again for capital and expertise to support those companies in the earliest days, because there were some wonderful things being built, but they were sort of running out of resources quickly because they hadn't learned the million things that I had learned from my own mistakes over the past 15 years. So that's what created GovTech Ventures. And so I'm a solo GP. It's a fund focused on pre-seed and early seed founders who have a direct line of sale or are being regulated by state and local government directly.
Great. Thanks for that. I love what do they say? The riches are in the niches.
Niches to riches. And then there's another word after that that also rhymes that I will.
So tell us, I know you have a big win to share. I always ask, what's a win for you in the last year? You have a really big one. So maybe share that and anything else you want to celebrate.
Yeah, I mean, so we had the first close of the fund in December, which was a feat of Herculean effort, I would say. It's a very weird funding environment out there, particularly for emerging managers, particularly for solo GPs, particularly for this corner of the market that I think it doesn't look and feel a lot like traditional venture in the age of AI. And I could not be prouder of the LP group we have. I have met and assembled just this all-star cast of exited GovTech founders and funders and later stage investors and deal makers and operators who all want to work with these early stage founders. And I have aggregated into one sort of central locale. And so now my job is to make sure that we as a collective can be force multipliers for the companies we're investing in and working with. But getting to that first milestone where there were enough people bought in and enough capital to deploy has been really one of the great moments of my career.
That's awesome.
Thanks.
I know that's a big deal.
It feels like it's I'm sure founders feel this when they raise their rounds too. There's just this feeling of like, oh, I'm not crazy.
Yeah.
Like, oh, there are other people who see this and get this. And I conceptualized it, and I've tried to see around every corner of like what this could be or where this is going. But I have people bought in, and I've convinced people I consider really, really smart to have bought in. And I'm very proud of that.
Yeah. And it's just to normalize the struggle, how long have you been working on this close?
Oh God. I started fundraising last January, so it took about a year.
Okay.
And what's different about venture than traditional sort of funding for startups is you don't take it all at once. So when someone gives you $1 million, you don't just like get $1 million check. You get a portion of that $1 million check, and the rest of it is allocated to you over the course of your fund, which is usually 3 to 5 years, and then it's a 10-year sort of recouping period. So you're constantly kind of pseudo fundraising. Like you get the initial check, you get the initial commitment, you call sort of this initial tranche of capital, and then you continuously call capital, and you really hope your LPs like make good on their promises. So that's one like added level of risk. And then unlike fundraising, again, as a company where you are running you should be running a relatively tight process where, you start conversations with investors in month 1, but by month 6, if you haven't really closed your round, like something's probably wrong with the round and you need to rethink the raise. It's very normal for VCs to raise for 18 to 24 months. And so one of the hardest parts of this was continuously showing momentum, because you're not like a company where you're like, oh, look at all this new revenue we've brought in, or look at all these new customers, or we've reduced churn. You have actually very few metrics, especially as a first-time fund manager, to point to show that the ball is moving forward. And so that was one of the hardest parts of this process for me, which was how do you come up with, how do you sort of like create metrics out of thin air that are meaningful and of course true, but also reflect the fact that this is a process that takes 2 years. And from month 4 to month 7, maybe you've closed more money, but you haven't necessarily changed your deployment strategy. You haven't been able to show an increase in your portfolio. That the marketing element and sort of the updating element was new to me and tricky.
Mm. Yeah, thanks for that. So you mentioned a little bit about learning from mistakes. I
Made a million of them.
One thing we say a lot here at Wisdom Partners is wisdom is failure redeemed.
I like that.
We borrowed it from somebody else.
You can take full credit for it, Josh. I won't tell. I was like, that guy is so smart. Wow.
I
We
think
should
that would
hire that guy as a coach. He's got really good sayings.
that would become another failure eventually that we would need to redeem.
Someone just Googles it and it's like, I think this is Aristotle. Like,
Yeah, yeah.
wow.
Me and Aristotle, we were tight. He got it from me first. Uh, so I wonder if you can share with us some wisdom that you have earned the hard way.
Oh, Josh, how long of a podcast is this? Well, I'll start with one of my earliest failures, and then I'm happy to talk about more recent ones too. When I was just starting In-State Partners, which was my previous business, I was bringing on clients. I was 22 years old. So first of all, I did not know how to build a business. Doing a lot of Googling, doing a lot of nodding in meetings, being like, yes, ARR, and then like going and Googling things. And I, sort of by sheer force of will, managed to convince clients to hire me, including Lyft. But one of those clients was the Airline Association for the Americas, which is the trade group for all of the airlines. And I was legislative tracking for them, meaning I was monitoring all of the bills that were coming out across the country that might impact them. My job was to sort of create a report for them every week that said like, hey, you might want to pay attention to Alabama, or you might want to pay attention to Connecticut, or like, something's happening in Florida, but we talked to our lobbyists and you don't need to worry about it. And I woke up one morning to an email that just said WTF and had a screenshot of a bill in Iowa that had passed that morning that was going to cost the airlines industry $9 billion that I had just missed.
Oof.
Because I was tracking jet fuel tax and not aviation fuel tax. And the bill had the word aviation fuel tax in it. So couple of learnings that day. One, you have to just take responsibility for it. Like there was no one else who had missed that bill. Like I had just missed that bill. So there was a certain level of just like mea culpa, biffed this one. There's really nothing I can do at this point to make it up to you guys. Can't pay you back. But here's what I will do differently going forward. So there's a lot of like, we've made this mistake. Let's acknowledge this mistake. I completely understand why you're upset. And going forward, we're going to make sure that this is a broader umbrella of terms that we're capturing. And the self-talk of being, when you get an email like that, or an angry client, or an angry customer, or a customer churns, and you just think like, this is the end of my career. Mm-hmm. Like there is no coming back from this. This is too big of a mistake. I look like an idiot. No one's ever going to hire me again. Time to go scoop ice cream in my mom's, and live in my mom's basement. Like there's nothing I can do about this. And that narrative becomes very entrenched if you let it. And I had a wonderful, still a mentor, but a mentor and a boss at the time. And I brought it to him and I said, I screwed this up. I'm so sorry. And he said, Rachel, I hired you. When I hired you, I gave you a 2-year contract because I think 2 years is enough time to fuck up and fix it. And I think you're going to fix it. You're going to figure out a way to fix it. And having someone reflect back on me, like, I'm not firing you. This isn't a fireable offense. Yes, you made a mistake. And let's think about this in a broader context over a longer period of time was such a healthy thing for me to start talking to myself about too. And so I find that even now, 15 years later, not to say that I don't feel like a serious drop of like in my stomach when I think about that story, because it's still to this day just like, but I have
Is there a
really
little
had
piece
to,
of you that's like, Iowa?
I mean, I've never forgotten it. Like I could give you the bill number. Like it's in there. But as I've gone through this process of raising money and hearing way more no's than I hear yeses, I have had to really remember the self-talk and the conversation about failure and like, what does failure really mean? Does a no mean failure or does a no mean just like no, which is in the context of many years and many conversations, a totally irrelevant data point in the broader narrative. And so that's what I've taken forward from this, which is just like this need to reflect on how I'm talking to myself after mistakes or no's come my way.
So
Instilled
important.
early. Bummer. Yeah.
I mean, in some ways, like dealing with failure is such a fundamental part of being a founder.
It's every single day there are micro failures. And as a solo GP and as people I'm sure who are starting businesses alone, it's particularly fraught because you don't even have sort of this compatriot in arms next to you being like, ah, man, I got this. Or like, ah, that guy's crazy, right? You just have to somehow figure out how to work through it yourself. But I would say I love working for myself, but not by myself. And I do spend I find I need a lot of sounding boards. And one of the reasons I have this LP group, but I have an executive coach and I have a husband who's also an entrepreneur and I have parents who I really trust and friends who I know me really well and mentors. Like I have really spent a lot of my time assembling a group of people around me who I trust and who are honest with me, who can reflect back on me what I'm hearing, because sometimes when you do it by yourself, you can't fully understand it. And so my sort of outsourced board of directors, both personal and professional, is really crucial for me as I build by myself.
That's a natural segue to the next question. Over the last year or so, what's one of the best professional development investments that you've made?
I have an executive coach that I got to know when I was in business school and who I really like for acute moments in time where something feels a combination of both emotional and professionally fraught. So I almost use her as like a point solution where I'm working on a deal and I'm stuck and I'm not really understanding the other person. I don't feel like they're really understanding me. I'm contemplating bringing someone as a partner or not. And she's known me for long enough that she doesn't even really need to know the day to day to reflect back on me sort of in that moment, some choices that I have. And that's what I want her for. I want her to think through options with me. I don't want her to tell me what to do. I can decide what to do, but I want her to think through options with me. So that's a really good investment. I also have a therapist, which is
Yeah.
a different kind of acute need
Yeah.
and is maybe more day-to-day maintenance because I want to be able to show up fully for my family and for my business. And I can't do that if I am stuck in my own historical loops. So I think of those as two very distinct things
Hmm.
and people in my lives and needs, and both of which are big investments when you're building something and you don't have a ton of income coming in and you're investing everything back into the business. But for me, having those sort of players in my life allows me to feel like I can show up fully.
Yeah, so important because especially at the beginning, but it doesn't really get less, but it's sort of more pronounced at the beginning. All you have is you. When you're building a business, like really all you're bringing to the table is yourself.
Correct. And in all of your foibles, right? All of your historic trends and processes, good and bad, the things that have gotten you here that are so strong about you and so willful, and I say like a certain just like willful ignorance or just like you need to see the best in all possible scenarios to be an entrepreneur. You have to just assume things are going to work out okay. But also with habits that I've developed over, you know, many decades that aren't serving me anymore and served me really well when I was a kid or served me really well at periods of my life, but no longer do. People pleasing being one of them. A need to, make sure everyone around me is really happy. That's a very good skill set of mine. But as a single decision maker, it can really muddy the waters. It can make me, in my weakest moments, take into a lot of other people's needs and feelings and opinions into account and stop listening to mine. But at the end of the day, I own this. I'm in charge here. And so I can't muddy the waters. I can take in inputs, but I have to stay really true to myself. And so working through that process has, I think, made me a much stronger leader.
Yeah, great. What do you usually advise founders that you invest in or that you work with in terms of their own personal professional development? How do you have these conversations with them?
I always want to know who's on people's personal advisory board. That's a question I ask really early. And if they say I don't have a personal advisory board, I tell them they need to get one. But it also gives me pause on why not.
Mm-hmm.
And I think one of the reasons is a lot of people have grown up in environments where they feel like they have to be the strong one and they have to be the decision maker and they have to be independent. But what that means is they stop listening and that they're often not coachable because they don't trust the people around them or they don't trust the advice they've gotten historically or a million other, traumas that have caused that. But I have a very hard time investing in working with founders who aren't coachable because my job as your investor and advisor is to help you see around corners. I've been in this industry for a long time. I have made a lot of mistakes. I have connected a lot of dots and done a lot of pattern recognition. And it's not that you have to only follow my advice, but you have to be able to hear it and incorporate it and then make the decision. And so if someone says, I don't have who do you talk to when you have a decision to make? And they say, well, I just make all the decisions myself. That gives me pause. That's a yellow flag for me. And I like to know that it's not just their wife or husband. I have a wonderful husband, but he should not be my only sounding board because we have a lot of layers to our relationship that inform the way that we discuss things and the decisions we make together. But sometimes you just need an independent voice who either knows you really well or knows the business really well. I have mentors who are wonderful, like extremely successful venture capitalists that don't know anything about GovTech, but they know a lot about investing. And I call them as I'm thinking about like large strategic business decisions or investment decisions. And then I have people that know the GovTech world really, really, really well. Don't know anything about venture capital per se, but are great operators. And I call them if I have an interesting deal, but I need another set of eyes from an operator perspective. And I have friends who I just think are really smart critical thinkers, and I'll call them if I've got a sticky problem. So I am like being surrounded by a lot of voices and parsing together, like putting a recipe together from a lot of different recipes. That's not for everyone. But if you're not using a recipe book at all when you're cooking, I think that's going to make it really hard for you.
You mentioned you have an executive coach. When do you think is the right time for a founder to get a coach?
I honestly was using her even before I guess I had founded my last business, but before I started the fund. I mean, we've known each other for a long time now, but I think it's a great neutral third party. And I think I call her when I have moments of self-doubt, but when I don't need necessarily to talk to a family member who says like, you can do this. And I don't need to talk to my therapist who's like, is that middle school trauma talking? But like actually someone who's like, I understand your business and I understand your habits. And let's talk about some paths you could take as you work through this. And so that's what I use her as, that sort of pinch hitter. I think founders should hire a coach early. But finding a coach is like finding a therapist or like dating. Like not every coach is a perfect fit for you. And so I think it's easy to get discouraged when you're putting out a million different fires and you hire a third party and it's just like not really a fit. So I would say that do it when you have a little bit of capacity to shop around or find a peer group where someone recommends someone, because it can be hard to just meet a coach or a therapist just out of the blue.
Great. Thank you. What's a challenge you're trying to solve right now?
There's a couple of there's a couple of them. One is when you're raising a fund, you do a first close, and then you do subsequent closes, and then you do a final close. And there's no perfect scenario for when you do a final close unless you like raise all your money, which is great. But there's these sort of intermediary steps that are a no man's land where you've got the first close, you've got the first thing, you're starting to deploy capital, you've got some of that momentum, but then you have to keep compelling people to invest. And so I'm in that messy middle right now where it's like, I've got this great group. I have a bunch of people who have said they're interested in investing, but sort of now what? How do I compel them to actually take action? So that's something I'm grappling with. I am really lucky to have fallen in with a group of other GPs, general partners of funds, who are also building their first, second, or third funds. And we use each other as sounding boards all the time on things that would feel, that can feel really obvious if you've done this before. But if you haven't done it before, understanding, what this tax term means and how people have navigated it, it's really nice to have a totally non-judgmental group of people around you who are building too. And I know that's what you do a lot of, Josh. And I think as valuable as the coaches that I have, like that group is also incredibly valuable.
Yeah, a coach and a peer group they really serve two different needs.
Yes. And I had never had a peer group really before. I'd been part of some where it just felt like because we were in even though we were at similar stages in our career, because we were in different industries, I had a little bit of a hard time connecting with their problem sets and then with mine, except on the very highest level of like personnel management or finance or, navigating partnerships, which is helpful. But because everyone is doing the same thing, even though we're investing in different things, but the same process exists for all of us, that's so helpful to just be like, well, that guy did that, so I guess I can apply that here, even though he's investing in media and I'm investing in GovTech, but the fund itself is the same. So that's been really, really helpful.
Yeah, great. So you work mostly with pre-seed and seed stage founders. What is some advice you often give to people? Let's think about seed stage. What's some advice? What are things that are unique challenges to that stage, and how do you help founders, or what is a key to addressing those?
Yeah, I think of the seed stage as you started to achieve a repeatable process, but you haven't necessarily achieved full scale yet. And this is sort of a funky talk about the messy middle. Like, it's great because you have something. And so there's in some ways this sense of relief of like, oh, this like might work, right? You've got six figures plus of recurring revenue in the venture world. And I think this is probably different for people who aren't raising venture capital. And let me say one more time, singing it from the rooftops, 99% of people should not raise venture capital. So, for this micro group for whom venture capital is the right fit. The seed stage is where you're starting to achieve velocity and you're like, this could be a thing. But you're also moving out of the habits and the processes that you've had to bootstrap and that you've had to sort of assemble on the fly. And that transition from, let's just say, founder-led sales to a sales team or a sales leader or your first BDR or AE can be really tricky because you as a founder have the way you do it and you've got charm and you've got your shtick and you like know the right words to say when, because you've made 1,000 calls and you've made 100 sales. And like at this point you're thinking about the script in your sleep. You just know how to read the room. You know what features are on the roadmap. You know what you can say yes to, you know what you can say no to. And the move from that level of discretion and sort of reading the room into like handing that off to someone can be really painful if you haven't been really thinking about that in your earliest days, that repeatable process. And I do a weekly video series on LinkedIn and Substack. It's like 3 to 5 minute videos on GovTech Go to Market. And I did one on transitioning from founder-led sales and how to think about founder-led sales in the long term. And the thing I recommend for founders is like, when you have a conversation that works, you get a yes on a sale, log it. Take notes on what worked. What words did you say when? How did you lead that meeting? How many meetings did it take? How did each meeting break down? And really do the work to retroactively do the play by play. And then try to take that forward into your next meeting and keep tweaking and keep tweaking and keep tweaking, but log it. Log it and write it down and make sure you're sort of creating these micro processes at every step, which will make that handoff so much easier down the line when it's not just sort of an ad hoc conversation every time, but like you two are following a playbook, even as founder-led sales.
Mm-hmm.
So that's what I spend a lot of time doing with my founders, which is like, how do we do that again? Okay, great. You got a sale. Like, how do we do it again? How do we do the retrospective such that we're learning from it and we're repeating it?
So valuable. That's I think most people, when they close a sale, they're just like, yes.
Yeah, for the girl who's closing LP, I'm just like, yeah. But the reality is that you have to start pattern matching really, really early, because it's great to get 10 sales like that on an ad hoc basis, but you cannot scale that to 250.
Another thing that this reminds me of is, I think by the time founders get to seed stage, especially late seed stage, they have unconscious competence. So they know how to do it.
Mm-hmm.
They just don't know how to describe what they do or what they know. And so then they hire a salesperson and they're like, go do it. It's easy.
Yes.
Because I don't even have to think about it. And then the salesperson or whatever, even it could be,
It has to basically start from if not square zero, square one.
yeah, it could be operations. It could be whatever. They have, the founder is like, I have unconscious competence in this. You should also have unconscious competence in this. And what happens is the first step is they have conscious incompetence.
Of course.
At first, they start with unconscious incompetence. They think, oh yeah, I should be able to do
I
this.
got
This will be fine. Yeah. And then they try it and it doesn't work. And they're like, crap, I suck.
Well, and it's the founder's job. I mean, the way I learned to lobby is that for the first legislative session, did nothing but follow around the older guys on my team to state capitals and sit in on meetings and listen to them lobby and have dinners with them and talk about it afterwards and ask questions. And I think it's hard for a founder when you're moving a million miles an hour and resources feel really tight to say, like, I'm going to take 2 months to just like have this person shadow me. Usually you're hiring someone and being like, okay, day one, like K of error, like, let's go. That's your job. But I think there is this training element that a lot of founders at that stage don't think about, because they're expending the resources. And so they need value really quickly. And so to give a little bit of time, even if it's 4 weeks, to train someone up and have them just sit with you and learn from you, they are not creating value. But then that means 6 months from now, they're not just starting to create value. 1 month from now, they are. You're spending money to make money.
Yeah. People talk about hiring is so hard, and it is. But I think half of the pain of hiring is onboarding is hard.
Impossible.
So it's like people think, oh, I just hired the wrong person. Like, no, you're just a crap onboarder.
Right. You haven't explained any of the rules here.
You just hired them,
They don't
hired
even
a
know
great
what game we're
person,
playing.
and threw them in the deep end.
Yeah,
And
they brought a lacrosse stick and it's a baseball game.
Yeah. 1 out of 3 can swim without training. So you think they're the great people. It's actually just, you need to do some training. So anyway, we call that, so the step, if you sort of scale that, or the key to scale is for the leader, they have to move from unconscious competence. I know how to do this without even thinking about it, to conscious competence. I have to think about how I do this in the ways that works. And then they can help somebody who's consciously incompetent move into conscious competence.
And you can start you develop layers in the organization. At a certain point, the CEO isn't training the new BDR, but you are the one who has to set the precedent that there is an onboarding period. And at the start, you are the one training the BDR.
Mm-hmm. Yeah, for sure. So if somebody out there is listening to this and they are like, "Ooh, I have a GovTech company,"
State and local, baby. Give me a call.
or if they're like, "I never thought about investing in GovTech. That sounds interesting. I'd like to wait less at the DMV,"
The,
or whatever. "I'd like to contribute to society in that way." Who are you trying to meet?
I would love, if you're a pre-seed or a seed founder building a product for state and local government, give me a call, Rachel at govtechventures.com. Or connect with me on LinkedIn. Pretty active over there with these go-to-market videos. I love other investors that are GovTech curious or already doing GovTech, both at my stage, which there aren't that many, but as companies mature, I'd love to talk about sharing pipeline with you and giving you access and insights into some of these early stage companies that I'm seeing and excited about. And anyone who's just curious about this industry. I love meeting people. So much of my week is spent just meeting new people. You have to be an extrovert in some ways to do this, but out of 50 calls a week, I would say at least 15 to 20 are all net new people. So here as a resource as you continue to build, here as a sounding board. And if I don't know the answer, I'll do my best to think about someone who I can connect you to that who does.
Awesome. Thanks so much, Rachel.
Thanks, Josh.
Really glad to have you on. Appreciate it. And I've been on some panels with Rachel, or I don't know, we've been doing panels at the same things. I'm not sure we've ever done the same one.
Parallel play panels.
Yeah, but for those listening, highly recommend connecting with Rachel. And of course, if there's any way we can help you, feel free to hit us up. Thank you, everybody.